But when we get a Dow Theory sell signal, 60% of such signals have been followed by a bear market. I am skeptical as to whether we're going to reach all-time highs. Why? We have two technical things. First, an inverted yield curve. And secondly, more important, and this is very technical, the NYSE volume top in February. And normally, tops in volume for the NYSE preceded bull market tops, normally with an average of 5 months. So if you add 5 months from February, you get July, which was the market top.
A lot of people think markets are dropping. Bargain, let's just buy the dips. And that's a really bad idea because, as you were saying, cascading effects.
Because we can break up to higher highs, but not to all-time highs.
Good point.
And this is what I think this is the most likely outcome.
All right, guys, hello and welcome. We're joined here by our special guest, Manuel Blay, the DowTheory.com. In this video, me and Manuel in this video are going to be talking about the major stock markets. And of course, this is a subject which everybody's talking about, and it's quite important because what I'm going to be asking Manuel is, well, how likely is it that we are in a bear market? Or is it more likely we're in a bull market? Okay, especially given what's been happening with the huge volatility we've been seeing in the last few weeks. You know, market one week is dropping quite heavily, and then one week, as we saw last week, bouncing, rallying really strongly. So what I'll be asking Manuel, and we'll be discussing, is was the bearish signal that we saw a couple of weeks ago, was that a false signal? Should we ignore that signal completely? Or is it more likely that we are just seeing a fake rally, just a false rally before we drop down again to much lower levels? What does Manuel think? I'll give you my views as well. So it should be quite interesting. Basically, we're going to be asking the question, what's going on with the stock markets? How likely is it we're going to go into a bear market? And how likely is it we're going to go into a bull market? All right, guys, join us. All right, guys, welcome back. So, first of all, huge thanks to Manuel Blay of the Dow Theory. I'll introduce you to him in just a few seconds. Just to mention also that the Dow Theory newsletter has been considered by the Wall Street Journal as one of the best market timing newsletters out there. How are you doing, Manuel? You well?
I'm fine, and thank you for having me on your YouTube channel. Thank you very much for having me here.
Yeah, great. Yeah, and of course, you're speaking to us from Dominican Republic, beautiful country. Yeah. Really envious of your great weather over there. Anyway,
still summer.
Yeah, absolutely. Manuel, if you don't mind, I'm just going to take a few seconds to set the stage, the context, before I bring you in and ask you the questions I really want to ask you. About a couple of weeks ago, you may remember that I mentioned there was a strong warning of a potential bear market. Why? Because the market is broken. Market at that time broke below several key support levels, broke a trend line. Also, the weekly chart had shown that it got rejected from the 21 weekly moving average. Several things were happening which were indicating increasing risk of a potential bear market. By the way, another factor was the drop in the Dow Transportation Index. The Dow Transportation Index was plummeting, fell below a trend line, and we got a Dow Theory sell signal from Manuel Blay. Dow Theory sell signal was generated about a couple of weeks ago. And Manuel Blay will explain more about that. But essentially what that means, what that did, that Dow Theory sell signal, was it increased the risk of a potential bear market. And we'll talk about this with Manuel as well. But in other words, the reason I'm mentioning this because I think I was right to warn of a potential bear market. In other words, I'm saying that I was right to warn of increasing downside risk. If I just ignored it and said, oh, don't worry about it, it's nothing, then if the market had tanked by, let's say, 5 to 10%, then you'd be saying, why didn't you warn us of a potential bear market? So I think I did the right thing by issuing that warning 2 weeks ago. Now, the market has rallied. We see a strong bounce. And by the way, this is a bounce which I also anticipated. If you recall, in my last video, I mentioned because the Halloween effect between, especially after October 31st, also in the month of November to December, there's often a strong bounce. We often see a seasonally bullish and strong action in the stock markets, okay, usually November because of the Halloween effect. Now, we did see a strong bounce. As a matter of fact, we came to some important resistance levels that I mentioned in the members video. So I was expecting about a 3 to 5% bounce and move to about 4,270 to 4,330 approximately there on the S&P. For now, what we're seeing, in my view, as I mentioned before, I think we're seeing a bounce probably into this region here between 4,270, which I think could be reached this week, to potentially 4,322, just near this resistance trend line. And potentially the next one up, the next resistance would be about 4,320 would be the next resistance above that. Now, the market had that bounce, but it was slightly over 5%, actually went to about 6%, just slightly over my resistance levels there. So it went slightly over the 4,330 resistance level there. So the question I'm going to ask Manuel here is, has that recent rally last week now canceled the bear market risk of the stock markets? In other words, is that recent rally showing to us that the bear market signal was a false signal? All right. So how likely is that? So that's what I'm going to talk about with Manuel Blay. Another thing I was expecting was this recent rally. I was expecting this recent rally to eventually fail and collapse and drop back down again into lower levels. So that's also another thing I mentioned in the previous video. I'm going to ask Manuel how likely he thinks that is as well. Thanks very much indeed. It's great to have you. And by the way, guys, before I even ask Manuel this question, let me just say that if you haven't already signed up to Manuel Blay's newsletter, the dowtheory.com, make sure you do so. We'll cover it at the end of the video, but let me just say at this point, it's one of the best newsletters out there. Manuel, I actually read your newsletter on a religiously regular basis every month. Every time you publish at the beginning of the month, I'm reading your newsletter. I think it's definitely worth your consideration, guys. Check it out on the link you see right there. See the link in the description as well. The link is thedowtheory.com. Apply the promo code LT2023. I don't make any commissions or anything out of the sale of the newsletters. I'm only saying this because I like Manuel. I think he's one of the best guys out there, one of the great analysts out there, and I think you'll definitely benefit from his newsletter as well. All right, guys. Manuel, thank you very much indeed. Thank you very much indeed.
Thanks to you for having me here.
Pleasure, absolutely. So Manuel, I got two questions for you, if you could want to answer them. And I'm sorry about the long preamble I had to do to start to set the context. So my first question, I've got two questions to begin with. The first question is it correct that the first Dow Theory sell signal that was generated a couple of weeks ago, towards the end of October, is it correct that was a warning, if the first initial warning or risk of a likely bear market?
It is a very strong warning because all Dow Theory sell signals are followed by an average further minus 11.4% to the final bottom. So there is a distinct possibility that prices get lower. Sometimes it only gets 1% lower, sometimes it gets 30% lower, but the average further decline to the final bottoms following the sell signal is minus 11.4 or 5%. So this is a significant pullback, a significant drop.
So what you're saying is...
You were right.
Thank you for that. So what you're saying is that after a Dow Theory sell signal occurs, like the one occurred a couple of weeks ago in October, there is usually further drawdowns, usually further declines to come. So it's a good idea to be aware and put on alert. And if I'm not mistaken, there are some analysts like Mark Halbert of MarketWatch. You sent me the article, and in his view, there's about a 40% chance or so we're already in the bear market. So his view is that we could already be in a bear market despite any big bounces, which can happen in bear markets.
I am even more pessimistic.
Oh, you're what, sir? You're even more pessimistic.
Yeah, in one sense, because he said in his article, he wrote that all 10% corrections have been followed for 40% of the time by bear markets.
Oh, yes.
But in our case, is our Dow Theory sell signal. So not all 10% corrections evolve into a sell signal. But when we get a Dow Theory sell signal, 60% of such signals have been followed by a bear market.
Right. So what you're saying is 60% of Dow Theory sell signals, like the one we got a couple of weeks ago, usually end up leading to bear markets.
A bear market.
A bear market.
So not all corrections are born equal, are created equal.
Yes,
so okay, right. Minus 10%, but in our case it was minus 10% with a Dow Theory sell signal, which increases the odds for a potential bear market.
Which increases the odds of potential bear market. Okay. Now, because the recent rally we saw, which again I was expecting, as I mentioned earlier, about a 3 to 5% rally on the S&P. Went slightly over that. The market actually rallied to about 6% rally. Do you think because of this recent rally we saw on the S&P, Do you think that that sell signal, the first Dow Theory sell signal, was probably a false signal? Was it one of the 40% false signals in the Dow Theory? Is that your view, or do you need more information from the market to make that judgment?
We need more information. So we need the Dow transportation and the Dow and the S&P to break up above their October 17th and October 11th highs, which is a resistance level you can spot on the chart.
Yeah, that's a very good point. I actually mentioned this as well in several previous videos. I said, look, risk has increased as long as we stay below the October highs near 4,400. And I agree with Manuel there. I agree. He's right. If the S&P rallies and breaks through 4,400, and especially if the Dow transportation also joins in, confirms that, then we'd have no choice but to move back into bull market mode. In other words, a bull market continuation.
Definitely. Likely. Yes.
It's a very good point. And again, listen, if that happens, and I know some of you think that's very frustrating, very confusing. I get it, guys. It's frustrating, very confusing when the markets keep giving us, sometimes you get these conflicting, contradictory signals in the markets, sometimes very quickly. But that's the nature of the game. I understand it's frustrating. I understand it's confusing. But again, we can't control the markets, as the markets are unpredictable, chaotic, and uncertain. So we have to be preparing ourselves for these potential pivots and changes in the markets. So Manuel, as a gut feeling, and also generally from your experience of looking at the charts, what is your view currently about the recent decline we've had from the highs we had in the summer to the lows we had in October? Do you think this is more of a correction, or do you think this is the start of a major bear market? Where is your analysis and, let's say, your gut feeling on this carrying you at the moment? I know we haven't got confirmation just yet. There are still some risks, but where do you think ultimately we'll be heading by the end of the year and perhaps in 2024?
I would say technically it is a correction for several reasons. First, because if you look at relative strength charts, aggressive sectors are doing better, performing better than defensive sectors.
You're talking about relative strength charts, yeah?
Exactly. Take the ratio, for instance, between consumer discretionary spending and consumer staples, for instance.
Yeah.
And you will see that the aggressive is outperforming the defensive sector. So normally this is not associated with bear markets. So, but we will know in 1 week, because next week is going to tell us whether these resistance levels get broken up or not. And this is going to have the last word.
Interesting. That will have the last word. So basically what you're saying is if in the next week or so, in November, we get a strong push and break above 4,400 approximately on the S&P, assuming the Dow transportation confirms that too, am I right? Then that will be a very bullish signal, am I right?
It will be very bullish, but in the meantime, aggressive sectors are outperforming defensive ones. So I still give the benefit of the doubt to the bullish case.
Okay. You're giving the bullish case the benefit of the doubt because of those factors you mentioned. Okay, that's really interesting. Thank you, Manuel. If that's the case, let's go with the view that let's say that's correct. Let's say that if it turns out that the recent signals we had a couple of weeks ago about the bear market or a potential bearish signal, if those end up being false signals, which they might be, we don't know, but let's say that happens. What is your ultimate target? For example, do you think the S&P could eventually move towards all-time highs? And how long do you think that might take if that happens, if the confirmation comes, which has not happened as yet?
If we get confirmation and we have the breakup, I'm skeptical as to whether we're going to reach all-time highs. Why? Because we have two technical things. First, an inverted yield curve, and it normally after predicts, this is a headwind for stocks. And secondly, more important, and this is very technical, the NYSE volume top in February. And normally, tops in volume for the NYSE preceded bull market tops, normally with an average of 5 months. So if you add 5 months from February, you get July, which was the market top. So NYSE volume topped in February this year. Normally, we have a special report on our website. It precedes a stock market top by 5 months. This tells the following. First, we can get higher highs, but that we break up above the all-time market highs, this is another headwind against higher prices. So we have the inverted yield curve and the topping volume. Does this mean that we are in a bear market? Not necessarily, because we can break up to higher highs, but not to all-time highs.
Good point.
And this is what I think this is the most likely outcome for the several months.
Oh, really? So
yes.
you're saying that from what you're studying, from your analysis, so the NYSE volume and also the yield curve, right?
Inverted yield curve.
That's a very interesting view, Manuel, because so what you're saying is even if the market does rally in the next few months, which can happen because, again, Halloween effect, the seasonal patterns between October 31st and December, especially with the Christmas rally and everything else, usually markets are bullish in this period, seasonally speaking. So you're saying we might get a rally, but not towards all-time highs, but we might get a strong rally, which might eventually fail and then drop back down again into some kind of a downtrend or bear market, perhaps.
Exactly. That's where I think it will happen.
Yeah, I was speaking to Charlie Burton a couple of weeks ago, and he mentioned something which I agree with, which is that even in bear markets, you can get these big rallies. Gareth Soloway calls this "rip your face off" rallies, and you got to be very careful. And in those situations, traders need to remember that they need to double their stop loss. I think Charlie Burton was saying double your stop loss, but have your position size, reduce your position size much lower, because the volatility just go against you, obviously. Even if the direction ends up being correct, the volatility can often go against you. That's a good point there, Manuel. Yeah, I think I'm going to end with this question from you, Manuel, on this subject. We had this rally last week, as we saw, very strong rally, about 6% on the S&P. What would need to happen on the stock market if it does break below the October lows, if the market suddenly were to drop down, and if it falls below the October lows? What would that mean to you?
That would be very bearish, because we are under Dow Theory sell signal, which was triggered on October 20th. So remember that normally we get an average minus 11.5% further decline. So the last lows were not as low as that. So it means that then look down below. And furthermore, there is like a cascading, I don't know whether it is good English, cascading effect. So like a loop or a vicious cycle. Once we go down minus this minus 11.5%, then we are reaching our bear market definition. And then it's not that we are bearish. Then we are under a bear market, which at the same time, it entails another further decline to lower lows. So this is like a cascading.
Absolutely. And it would be very dangerous to consider buying dips at those kind of situations, right?
No.
A lot of people think markets are dropping. Bargain. Let's just buy the dips, and that's a really bad idea because, as you were saying, cascading effects. So I like that phrase. I'm gonna use that phrase from you more often. Cascading effects into much lower levels, downtrends.
With a better accent.
Hardly. Well, thank you. Do you want to add anything else before we finish?
Well, I insist that NYSE volume top in February, and this usually signals a top, and there is an inverted yield curve. And even if it uninverts, it was inverted. So the effects are already to be felt. On the stock market, I'm not predicting the economy. There is a measurable relationship between the inverted yield curve and stock market performance. So we are facing two headwinds.
Absolutely. Guys, also let me say that from a probability perspective, I would say that right now, the situation is a 50-50 coin toss between bull market and bear market. In my personal perspective, it may not be in Manuel's perspective, but for me, I would say the outcome, whether we're going to go back into a bull market or a bear market, depending on which level it breaks, whether resistance, the level I mentioned earlier, or support, like the one Manuel mentioned, I would say that the odds right now are about 50%, 50-50. And I know many of you who are watching this video hate that. And what I mean is, I know you hate me saying that 50-50 or 50%, because nobody likes that. Because, oh, no, tell me which one is more likely. Unfortunately, guys, there are situations when I can't do that. Sometimes the analyst has to just say, look, we don't have a high probability. But I will say this, the only reason I'm saying that is because we don't have enough information, okay? Once we get more information from the market, and I think information will come in the next few weeks, isn't that right, Manuel?
Yeah.
Once we get more information from the market, then the odds and the probabilities will shift in favor of one of those directions, one of those outcomes. Okay. So all I'm saying is let's be patient. Let's be patient. And then the market will tell us which path has the higher probability. So at the moment, I'm sorry, guys, I don't have a high probability as to which one is going to go because of some certain things have happened which have shifted the probabilities. Anyway, but we'll find out very soon. Guys, before we finish, by all means, check out Manuel Blay's newsletter. Absolutely worth it. And Manuel Blay has been very kind to us as well, giving you 25% discount. Again, let me repeat, I do not get any cuts from this because I'm recommending because I like Manuel. I think it's one of the best newsletters out there. Okay, definitely worth your consideration. I've been a subscriber of the Dow Theory newsletter for many years. I think it's by far one of the best newsletters out there. Manuel Blay does an enormous amount of research. Every month I see tremendous amount of research he does into the market. So I enjoy reading your newsletter, Manuel.
Thanks, Alessio.
And definitely worth it. Please go ahead and check out Manuel Blay's excellent newsletter. And that's the dowtheory.com. Make sure you type that in, the dowtheory.com, and apply this promo code LT2023 to get a 25% discount. And again, guys, definitely worth your consideration. And remember, guys, the promotion for 25% discount is for a limited time. Do check it out. Apply the promo code LT2023 at the checkout and get a discount as well. Thank you very much, Manuel. Really appreciate it.
You're welcome, Alessio. And always a pleasure to be with you. Thank you.
Thanks very much indeed. Cheers.